Stock markets choppy, dollar struggles despite elevated yields. Asian markets were mixed at the start of the week as investors digested the latest economic data from China. The Shanghai Composite climbed after the data showed that the country's GDP grew 4% year-on-year and 1.6% quarter-on-quarter in the fourth quarter, while retail sales grew 1.7% year-on-year in December, coming in below expectations. In Europe, Credit Suisse stocks fell as the bank's chairman resigned after breaking coronavirus quarantine rules. U.S. markets were closed on Monday for Martin Luther King Jr. Day. On Tuesday, Japan's benchmark Nikkei 225 fell slightly after the Bank of Japan left its monetary policy settings unchanged as expected. The central bank governor Kuroda said that they are not considering hiking the key rate or tweaking the current monetary easing at this stage. Meanwhile, the Shanghai Composite rose 0.80% after the global rating agency Fitch said earlier in the session that China's growth should improve during the second half of the year, as policy support in mainland China takes effect. Wall Street stocks plunged on Tuesday as 10-year Treasury yields hit fresh two-year highs amid ongoing speculation surrounding the Federal Reserve that could raise interest rates more quickly and aggressively than expected. The S&P 500 slid 1.8%, the Dow Jones Industrial Average shed 1.5%, and the Nasdaq Composite retreated 2.6%. In individual stocks, Microsoft Corp fell 2.43% after the company unveiled a $69 billion deal for Activision Blizzard Inc. Goldman Sachs missed expectations for the fourth quarter earnings, sending its shares 7% lower. Following suit, Asian equities saw another bearish session on Wednesday, with the MSCI Inc.'s Asia-Pacific Share Index falling for a fifth consecutive session. China's Shanghai Composite fell 0.33% despite the central bank having pledged to use more monetary policy tools to aid the economy. Japan's Nikkei 225 gave up 2.80%, leading the losses in the region, while Australia's S&P ASX 200 fell 1%. European stocks closed higher on Wednesday, shrugging off concerns about rising bond yields. The U.S. Treasury yields topped 1.90%, its highest level in 2 years. The Pan-European Stock 600 closed up by 0.2% after starting the session in the negative territory. In individual stocks, Richemont shares jumped 5% after luxury goods giant posted a sharp rise in quarterly sales. On the data front, the UK inflation hit an annual 5.4%, its highest since March 1992, versus 5.2% expected. The FTSE 100 has settled just below the flat line following the report to finish 0.35% higher eventually. In the U.S., stocks fluctuated between losses and gains but ultimately closed at session lows, extending a recent stretch of losses on Wednesday. The technology-focused Nasdaq Composite dipped 1.15% to close in the correction territory. The Dow Jones Industrial Average and the S&P 500 fell nearly 1% each. The S&P 500 is now just about 5% below its record close. In individual stocks, Morgan Stanley saw its shares rise 1.8% after the bank's fourth quarter profit topped estimates while equities trading revenue jumped 13%. In currencies, the USD index bounced off two-month lows in the first half of the week to turn back negative on Wednesday. Today, the prices consolidate recent losses around 95.55, up 0.04% on the day during the early morning in Europe. In the short term, despite the greenback remaining in bearish despite the recent corrective pullback from the intraday lows, while the broadish bullish trend remains intact. Furthermore, the USD index could resume the ascent ahead of the Fed meeting due next week as traders expect the U.S. central bank to signal a March rate hike. Meanwhile, the pound bounced back above the 1.3600 figure from one-week lows registered around 1.3570 on Tuesday. The pound sterling USD climbed to 1.3650 before retreating, while finishing marginally higher on Wednesday, but retaining a modest bullish bias today. In part, the bounce was due to a weaker dollar. Also, the cable was underpinned by latest economic data out of the UK, with the CPIH rising 4.8%. As the 12-month inflation rate was the highest since September 2008, the report has lifted the odds for a Bank of England rate hike at the end of the meeting in February. Asian stock markets were mostly higher on Thursday after China cut interest rates to shore up fledgling economic growth, and Japan rode a rise in exports, while Australia's unemployment rate dropped to its lowest in 14 years. Still, the Shanghai Composite fell 0.1%, while Hong Kong's Hang Seng rallied 35 points. In Japan, the Nikkei 225 added 1.11% after the data showed exports jumping 17.5% from a year earlier, up for the 10th straight month. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.